Hello friends, welcome to the show. I'm Rocky Outcrop. This is 100% quality technical analysis. Thank you so much for joining me. And we're taking a look at Bitcoin just now, and this is the 24-hour, actually no, the 4-hour CME chart that I have open behind me, the Chicago Mercantile Exchange. And I hear you asking, where are all your drawings gone, Rocky? Well, I'd just like to show you this. If I open up the object tree and you look above my head there, you can see that I have several drawings on the charts, but they're all hidden at the moment and they all have their own names. And I can show you quick and easy little things, like if I want to make a reference to the big gap that we can see on the 24-hour timeline down there between 9,850 and 9,735 on the Chicago Mercantile Exchange. That's the gap that started over here and was partially filled here. Then I can just pop that right on there for us. How great is that? What if I also want to take a look at something, for instance, the 5th of September low, coming in from when we filled in this gap partially over here up to the 19th of September high Fibonacci retracement. How about that? Pop that on. There we go. How handy is all of that? So that's pretty good. And I also wanted to show you that I've done the same thing over on the BitMEX chart that I'm using at the minute. And we'll be discussing this little idea during the episode. Will we be having a rising wedge going towards the top side and seeing continuation of the downward side price action, putting in simply what has been overall a lower high before going on to potentially make lower lows in and around the sub 10,000 area? Or will we be rising up and seeing the prices take out this area here and kind of confirming this as a local higher low and getting in a higher high as part of a small upward trend on this chart so far? Cooly schmooly. There's one other little update I'd like to introduce to the show, which is that I've edited the the DMI indicator code again down below, and if you want a copy to this, just ask me a copy of this. Ask me in the Discord. Of course, this is always in beta. I just kind of edit it on the fly, and what I've done at the minute here is I've changed the ADX line to go pale blue, sort of whitey color down there when it's below 12 or below 13. Let me just actually get up the code so I can actually read it and tell you what I've done here, just real quick. Pull that down a bit. Let me see. So the background color goes to white here, just transparent white, just a little gray background. If the ADX is below 12, and when the ADX is below 13, it goes to that bright blue color. Okay, so just get rid of all that code there and bring this back up again and make a reference to this then, since we're seeing it just now on the charts. Now, when this ADX line goes very low like this and below the 15, what we see is that there's a potential for greater volatility, especially when it's below 10 and all that sort of stuff. But we can build up obviously and go very low. But we'll take a look back at a couple of examples as well where we've seen similar stuff happen, and I've just marked that out to make it easier to identify these areas. And we're in one, or we've just been in one, there now, which could indicate that potential for a little bit more sort of price choppiness coming up soon. And you'll also notice one other thing, actually, if you're being eagle-eyed, and that is I've got a red line up the top now as well as one at the bottom, and they're spaced out slightly differently. And what I've done here as well is I've edited it so that I can use fib levels or just the sort of standard grid of blocks of 10 just by changing this setting inside here. So that's actually down there at 8, then 13, then 23, 38.2, 60, or sorry, what's this one? 50% and 61.8 there at the top, just to give us an even better alignment perhaps with the way that we can look at these key areas. And as you can see here, just in this area is quite a key one. And if I look back then and see another example of stuff like this, there's a couple of them just here, so we can look towards what the price action kind of happened in and around about the 20th of May there, and around about the 1st of January 2020. So on the 20th of May, what we're talking about here, where was it? Just here. So you can see that if I line this up, that there's quite a bit of volatility following on from that white that white background area. And over here as well, you can see that there's quite a bit of volatility following on from that background area as well. So could we see some of that sneaking up to catch us out, catch us unawares? Well, we're not unawares of it, but we could potentially see it. What else is there of note to look at on the charts? And of course, let's just zoom on a wee bit in so we can take an assessment of this little bit of a trend that we have at the minute on this 4-hour time frame. This, of course, is still on the BitMEX chart. And looking at these two lows here, where we saw a low followed by potentially a lower low, you could say here, as part of this downward trend section just here, we saw some bullish divergence on the RSI, the Stochastics, the DMI, and indeed on the MACD here in this downward section, which has led towards this upward price action. Now, what's happened here during this phase is we've actually had bearish divergence on the MACD. We've had bearish divergence on the ADX as well, between the most recent high here and the previous one. And what we also see over here on the Stochastics is that we've got that bearish divergence quite distinctly, showing us a slope down the way as we've come up, and most recently been rejected on the 4-hour time frame from going into that overbought territory, which is obviously what we call on the channel the extremely bullish zone. By the way, if you're getting value from this episode, hit that subscribe button. I would really appreciate it. Then what we see here is bearish divergence, of course, as well, between the recent highs on the RSI, with this high coming in here distinctly lower than this previous one, giving us an almost head and shoulders-esque shape to the recent highs structure here when we look towards this sort of so-called shoulder and this previous section in the price action. And of course, this kind of is represented as well slightly in the price action itself. Now, the question becomes, if we were to actually have a wedge, where we've got a couple of touches here so far, would we go up and touch this even higher and perhaps put in what is a third higher high with bearish divergence between them? Or will we see this actually just kind of sink down a wee bit from this area? How about we add a little bit of context to this price action by sticking a Fibonacci on here from our object tree? Looking at this, how about we choose this one on the 5th of September low to the 19th of September high? So down here at the start of where our wedge is the 786. I almost said that wrong. What we're looking at here is that it starts over here on our lows on the 5th of September and goes up to the high up here on the 19th of September. And what we see here is we've come down and we've touched in the 618 zone, then actually pushed on further and put in a 786 retracement with this bullish divergence on the go, which has led to this most recent of price action. And we've come up towards the top side and attempted to make this an invalid Fibonacci retracement on two separate occasions, over here on the 28th of September and now laterally in the start of October, with a rejection so far fairly rapidly back down below the 236. How are we doing in terms of time? 7 minutes. Covered a lot of details so far. I think it's going quite smoothly. Down here below the 236 on this Fibonacci retracement. That's interesting, as it does position us in an area which now leads us yet again to be looking down towards these potential lower areas. If we were to put in a low like that and we were asking a question about this as a trend, just in terms of this 4-hour time frame, now forgive me as I take out the brush here and just draw in a couple of things. So we had these two lows here that became bullishly divergent as at the end of this downward trend here, with the final low there, a high, a low, a high, a low, a high on the way. So there's your high, your lower low, and your lower high, and so forth. Then what we've started here is this upward trend with a low here and a higher low potentially, and a higher high potentially, and a higher low potentially. And that's what we could be looking at. But if we see this simply turn around from this point and put in a price which it closes and then reverses in around about this 618 again, that would be the most sort of bullish case scenario, with a realistic retracement in the next near-term future in terms of looking at highly manageable, easy entry exit trades right now. As what you'd be looking at between these 2 points would be a higher low, with this overall area here, but primarily this one showing us where the local high was. So you would have, at that point, a low, a high, and then a higher low, with all this stuff in between simply being just the flux that you get along the way before finishing things out. Actually, though, the high would actually be, to be accurate about this, over here where the most recent high was, which of course is bearishly divergent. Here, as we look, that should angle up the way ever so slightly, and we see this angle down the way. Okay, so that's the kind of the clear scenario there. Is there anything else that might give us a clue as to what could be going on? Now, as you can see, you've got various other things here, which I'm not using currently as part of this episode because they don't necessarily impact on the relevancy of what we're looking at just now, as you can see as I make those visible, but they don't actually appear because they're above and below where this price action is currently. So if I just hide all that sort of stuff off again and leave these two on, because they're the key areas for us in terms of, the macro picture at 13k, and of course down there at 9,200 or so, just in terms of, the bigger picture. What I actually want to put on right now over here is a couple of pitchforks. We've got two different pitchforks ideas. This is the one that we've been looking at for a long time on the charts now. If I just hide the other drawings that we have for now, as we've already discussed them, and instead look at this context, bearing in mind, of course, that we've just gone down below the 236, and this recent price action could be a rising wedge, with, of course, that bearish divergence. I'll just bring up the price action full screen at this point because we've discussed those oscillators down below. How are we doing in terms of time? 10 minutes. Okay, so I'll kind of try and get through this fairly quickly. I've got to jump over to my friend Steve Jobs, who's anxiously waiting to have a wee chat with us before we say cheerio. So don't miss out on that. He sat there so patiently waiting back in. He's been waiting since, I don't know what, looking at his face there, he's been waiting since like 1990 to have this chat with us. So patience is a virtue. And looking over here then at this pitchfork, we've seen happen in and around that time when we came up and we tested it around about the 236 before, etc., that we were supported by this lower line, operating between the lower line and the median line of this pitchfork, coming back down again and actually visiting areas outside of it. Now, of course, we have a couple of parallel channels that I can poop on the charts there. Should actually have this order a bit easier for me to manage, and you can see how this extensions of this pitchfork were also respected quite neatly. And then we've come back up, and what we're doing as well is we're struggling around this area. So you could really sort of look at this with a degree of negativity yet again if we close below 10,750, where we might then see some further downside action, looking to get again at least, I would say at that point, towards the neckline of this sort of potential head and shoulders area in there at 10,600. Of course, then as well, this isn't the only one that we're looking at just now. If we did see that upward side price action, then we could be looking up towards that 11,200 area, where perhaps we put in a higher high, although it would be interesting to see if that did happen with some positivity did happen, and what the result was that we actually I'll just put this above the other one as well, what we actually just did was respected this trend line along the way, and perhaps then, of course, filled out more of that other pattern that we already have. So that's kind of putting that into perspective. And if I just hide that pitchfork, then there is another one, that I wanted to show us currently, and that's drawn in from the swing low before we came up to this high, this most recent one, down there starting on the 27th of June, coming up towards our high there on the 17th of August, and then drawn down towards our low on the 5th of September. And you'll notice that, of course, this is just your original, let me see, I know it's an inside pitchfork. The original pitchfork goes towards the top side. That's obviously quite bullish, and the prices are struggling. This is the chat I wanted to have here with regards to this one. The prices are struggling to stay within this zone, but if they do, of course, maintaining that 236 and move towards the top side, that's quite a good picture to have overall, where you'd have stayed within an extension of the pitchfork quite easily overall with regards to that. But you could make similar discussions with regards to the other types of pitchforks as I move down the list here, of course. But what I'm actually curious about would be that if we had this operating for us in terms of a pitchfork as well, this inside pitchfork coming up here from these highs and looking at how this was respected in terms of the median line, right from when we kind of broke into it here, or perhaps if you like over here, we came down and then just tested outside of it with a wick, back up and out again, or back up and down again, then up towards the top area of this, all the way down straight through where the median line of it is, down towards where we see this lower line before actually finding support, moving up and then straight down again before coming up, retesting that area. And as you can see, as we've broken down or indeed come down and tested these things as resistance, there sort of seems to be quite a distinct reaction at those points, and that makes it kind of curious to me as to the validity of this, as in it sort of reaffirms it in the sense that perhaps what we have is in terms of the numbers behind this and the sort of, and the cascade of time that we have this being respected by algorithmic type traders and the like, and whether or not this is indeed interesting or not. Of course, that's entirely up for you to decide. Currently, this is what we're looking to, and can we then push on beyond these areas and get up above this 11,100 area towards the upper line of this and try to start to get to the point where this really gets challenged for a potential move beyond it. And if we were to do that, then that would be kind of moving beyond the scope of this bearish divergence, perhaps undoing it along the way and turning what was previously a rising wedge into a parallel channel. However, that would require perhaps a fake out towards the downside first for us to then fully succeed in that regard, pushing that into being a parallel channel and then just simply continue towards the top side thereafter. And while we have this sort of little warning flashlight in the background, it's interesting to be aware of all these different permutations in the market currently. So we're now at 15 minutes, and I think this is as simple as possible to take very high level technical analysis and break it down so that you can see the entire narrative just in terms of the 4-hour candles with regards to this spot price action, and of course as well the CME charts that we've been speaking about. And of course a lot of the similarities of the spot prices, obviously with this being the same underlying asset, are appreciable on this chart as well. But we can just finish off with a quick reminder that if we did push towards the downside and come in for this big gap down the way at the bottom, then we could be also looking over towards the lower lines here of the pitchfork and indeed this blue serrated line, if this were to then ultimately be the case, putting in what could then at the end, just to wrap up in terms of the highs and lows type chat, a high, a low here, a lower high, and then of course a lower low. So what it kind of does boil down to in a lot of ways is how we interact, should we see any, with retracement down the way with regards to this, with regards to the 618 zone here on this Fibonacci, or indeed if we push past the whole thing, and with regards to the measured move off the back of this trend line, if we were to go down that way, or indeed if we were to avoid that, how we would operate in amongst the potential for this high to come in here at this point then and to be superseded by a latter high here on the charts with regards to the divergences that we have down below. That, my friends, is where Bitcoin has gone and where it is going. Of course, with all of these, you can identify clear risk management areas in terms of how you could manage your trades without taking on a big loss. Now, you might have watched all of this and be eager to trade at this point, given that I've kind of broken it all down for you detail-wise, but you might also be somewhat fearful because, people, what they do is they have a FOMO kicks in and they don't want to actually let go of a position if it's going against them in the market. Now, what we talk about, while it is incredibly looks like predictions and crystal ball stuff, and we joke about it on the channel, that what we actually do here is just simply identify risk management targets, and we're not afraid to lose. In fact, if anything, you could argue that we have the sort of the Karl Popper, the Popperian approach to trading, where we actually use the scientific method and try to discover as quickly as possible if we're wrong with regards to the hypothesis that we've laid out for where the prices could be going. And that is why we're successful traders, because of that ability to manage risk, rather than trading just being a dream, a pipe dream or whatever. Wouldn't you agree, Steve? I know you've been eager to talk on it, but we were talking about this before I started doing the technical analysis. What do you reckon about that?
That's what separates sometimes the people that do things from the people that just dream about them.
Wow. Yeah. Well, that's kind of what we're talking about with regards to trading. I mean, for me, it's been trading, obviously, with taking this on. But for yourself, you're the founder of Apple and and Pixar. So I suppose really it's all sorts of different walks of life. That ability to be to take it to be willing to fail is super important.
You gotta act.
Yeah.
You gotta be willing to fail. You've got to be willing to crash and burn. With people on the phone, with starting a company, with whatever. If you're afraid of failing, you won't get very far.
Wow. So that's interesting. I absolutely agree. And that kind of does determine how we have been trading and why we've been successful for the last wee while. It's not really so much FOMO and fear of missing out, or indeed a FOMO in terms of holding on to a position because of some sort of other type of fear of failure as well, or indeed greed that makes us good traders and yourself a good businessman, Steve. It's actually that willingness to take the risk and identify what the risk is, and then of course fail quickly should that be required, because you have to be willing to do that and put yourself out there. Copyright, of course, for that video goes to Santa Clara Valley Historical Association. I hope you are okay with me including that in the end of this Bitcoin technical analysis, and if not, well, then I'll have to edit it out of the video. But of course, that's all good, and thank you so much for joining me. So if you've got value from that episode, as of course my pal Steve Jobs did, and of course I put my heart and soul into these things, then maybe you'd hit that subscribe button. Come back for more of this again in the future. Check out the other videos that I put out today where the charts are indeed a bit messier, but they will evolve to this standard, of course, over time. And join that Discord where you can chat to people about all sorts of good stuff. This is definitely some of the best technical analysis you'll find on the entire internet. I definitely believe in that as much as I believe in you and your individual ability to become a consistent, reliable, self-reliant and resilient trader who's managed to actually achieve consistent, profitable results. Now, I'm not a financial advisor and none of this has been financial advice, but I am a spirit guide, and I would say well done for taking this very, very, very good proactive approach to improving your trading. All the best out there. I'll see you in the next episode.